you're a financial advisor or individual investor, how can you make the most from your ETF investments? Here to discuss that is Mike Akins, CEO at ETF Action. Mike is joining us from his Denver office. Mike, welcome to the program.
Thanks for having me. It's good to be here.
Most of the frenzied activity within the ETF market is focused on developing and issuing new products. Your Denver-based firm, ETF Action, is an upstart that's focused in a radically different space of the ETF market: data analytics, research, and model portfolios. Can you talk about that?
Absolutely, yeah. So ETF Action is a data analytics platform. Our main vision is to use the ETF market to do research through the lens of ETFs. The transparency of the ETF market, I think, is underutilized in that you have index providers, ETF sponsors that have spent millions, if not hundreds of millions of dollars building and breaking the market into all kinds of different categories. And we believe that transparency and that research that these firms have done provides a lot of opportunity to aggregate that data and look at the markets through the lens of ETFs. I've done the sponsor side of the market prior to founding ETF Action with my partners. I was the head of ETFs at Alps Advisors, building and designing ETFs, and we've had a very good run there. We've built it up to $15 billion. But through that process, I felt there was a misunderstanding by a lot of financial advisors and investors in how they were going about using ETFs. And I also felt that they were not unlocking their full potential. So what we did is we just took our the platform, and we want to create a fintech platform that unlocked that transparency of the ETF market and allow our users to explore not only how can ETFs help their investment needs, but how can it also help their research needs.
So you say to invest early, invest often, and always have a plan. Can you tell us more about that?
Yeah, so the whole idea of invest early, invest often, always have a plan, that's not unique, but I think what's unique is that the ETF and the build out of the ETF market has made that a reality. So now with a little effort, a little time, you can align almost any client's needs, investment ideology, beliefs, macro assumptions with the corner of the market in a very low cost, transparent vehicle that is easily tradable, just like a stock. So that ETF market has expanded the ability to align these investments, not just for the ultra wealthy or the ultra affluent, but for anyone who's willing to spend the time and effort and has the right tools to align their beliefs with their investment needs. And really, if you think about it, the best thing about investing is to invest. So first and foremost, whether you invest in the best performing mutual fund or the worst performing large cap mutual fund, really what matters most is time in market and not the difference of that annual compound return. It makes a difference, don't get me wrong, but the most important thing you can do is start investing early. And we think ETFs open that door up to all investors because of their transparency, their ease of use. And that's really the idea of that saying, that statement.
Changing gears, I think it was investing great Ben Graham who said the investor's worst enemy is likely to be himself. So what are the biggest mistakes you see ETF investors making?
Oh, that's a great question. So first and foremost is, you've heard the saying, don't judge a book by its cover. I always say never judge an ETF by its name. The nice thing about ETFs is they are transparent and you can look through and see what's inside of them. I like to say trust but verify. So if an ETF says that it's a quality ETF, quality can be very arbitrary in nature. What we've found is looking across all quality ETFs in the US listed marketplace, there's only 10 or 15 names that are common across very large ETFs, though they all have quality in their name. So what you want to do is you want to make sure that the quality aligns with your type of thinking, or clean energy aligns with your line of thinking for what defines that. So the first and most important thing that we think investors should do is to understand what's inside of an ETF, trust but verify when it comes to the investment objective of the strategy. And really that's what's great about ETFs is what we do at ETF Action. We believe ETFs are just a sum of their part. We aggregate those parts into a simple, traditional data points. So if you want to look at quality, how do you judge quality? Is it consistency of earnings? Is it debt to equity ratios? Is it your leverage ratio? Is it your profit margins? All of these different issuers have their own unique methodology to define. And what you want to make sure you're doing with an ETF is you're aligning your beliefs with that ETF's index methodology or stated objective, and then make sure that they actually hold that. Another area, unfortunately, that we see is just like with mutual funds and stocks in general, there is performance chasing a lot. You have to stay the course. If you're going to go away from a straight beta ETF, we believe you've done your homework, you've done your due diligence, you know why you're owning value, or you know why you're owning momentum, and you're using those ETFs together inside of your portfolio to create one complete product. And really that idea of staying the course and not getting caught up in the performance chasing game. We've done a lot of research on flow analysis, and everybody likes to talk about ETF flows. It's sexy, it's fun to talk about which ETFs are getting the most flows, but in reality, a lot of times we look at it as a contrarian indicator. A lot of times when the money really starts heating up, that's the time to start thinking about, okay, this particular area of the market is overvalued. And with ETF flows, it can be a great research tool, great research data point, but you want to make sure that you don't get into that performance chasing standpoint.
Okay, so now I'd like to get your thoughts about cryptocurrencies. What's your take about the upcoming and eventual launch of cryptocurrency ETPs linked to Bitcoin and other cryptos? How do you see that unfolding?
So first and foremost, I think it's long overdue. We have ETFs on almost everything, and whether it's a good idea or a bad idea, I think the main idea of ETFs is to provide investor choice. And they should come with warning labels, just like, triple leveraged oil should come with a warning label, or triple leveraged biotech, or whatever it may be. But from a standpoint of investing in crypto, it's hard to argue that a properly well-defined custodian with the right investment advisor, the right sponsor, it's going to provide a much simpler way to invest in that asset class. Now, obviously, we know it's a very volatile asset class. Right now, there's a Bitcoin trust, I think the symbol is GBTC, that is very popular, has lots of money following it, but it's closed. It's not like the same as a ETF in the sense that it's transparent and trades at NAV. So it trades at a large premium and discount. So you have investors buying into Bitcoin via a trust because they don't want to use it, actually buy the Bitcoin, but they're paying in some cases a 40% premium. As little as 6 months ago, they were paying a 40% premium to get Bitcoin, and now it's only trading at a 13% premium. So they've lost 27% of their value simply because of that premium discount. With an ETF, you could eliminate that, and it would be a better investment vehicle to invest in it. That is completely a side point from my views on Bitcoin or my views on cryptocurrencies, but I think from a standpoint of providing investors access, it makes a ton of sense.
You say that every investment portfolio should tell a story. And when you think about ETF investing, both advisors and retail investors can customize their investments to tell the type of story they want. Why is that important?
So the reality is that one size doesn't fit all when it comes to investing. And certainly you couldn't go wrong with just buying an S&P 500 fund, buying an MSCI EFA fund, buying the bar cap egg. Again, investing is the most important thing. But really, I think what most successful investors do is they align their investment beliefs, their macro assumptions, their actual needs and goals with their investments. And that having that ETF concept allows investors, it makes it a reality to do that. If a client were to give me an investment portfolio and I were to go through and look at the actual holdings of what they're investing in, I should be able to tell you a lot about that client. I should be able to tell you where they're at in their investment cycle. I can tell you if they're, a risk taker or risk averse. I can tell you if, they believe in themes such as clean energy, or if they believe in robotics or AI. I can tell you a lot about an investor based on that portfolio. And I think that every portfolio should tell a story is really just saying, look, if you take the time to ask the right questions, in most cases, you can align an ETF to that investment vehicle. And really that's what we're trying to do with our platform, is help people to align their investment beliefs, their ideologies, their macro assumptions with the right investment vehicle. And ETFs have made that a reality in the marketplace. By no means am I suggesting that ETFs should be the only thing in your portfolio and there's not other investments. But by and large, they've expanded the capacity to allow investors to really tailor their portfolio to their beliefs and their needs.
One final thing before you take off. Markets are always evolving, introducing unexpected risks and opportunities with each new trading day. And your advice to financial advisors is they should have a process to align the right ETF, to properly manage risk, and to capitalize on the opportunities at hand. Can you tell me a little bit more about that?
Yeah, so, with over 2,300 ETFs in the US market now, over $4 trillion in AUM, there really is an ETF for almost anything in the liquid investable marketplace. And understanding which ETFs track which going-ons in the market, what's happening in the market, allows you a toolbox to react to risks and opportunities very quickly. Even if it's just temporarily to get access to a particular area of the market that you think is oversold, or reduce allocations to a particular area of the market that you're overbought. We produce macro briefs every day for our clients, so major macroeconomic releases, and then we align that macro brief to ETFs that have a high correlation to that. So for example, today, FHFA home index was out, along with NAR, National Realty home prices index. And we talked about the home builder ETFs that existed. If you believe, like we do, that the market, that lower interest rates, low unemployment, strong backdrop for the consumer is going to lead to more folks buying homes, more folks remodeling their homes, it may be an area that you want to access. Well, you could go out and identify the companies, but a very simple way to apply that in your portfolio would be to go out and buy one of the 3 home builder ETFs that are in the marketplace. And I think that's what we're talking about with ETFs, is it doesn't need to be rocket science to understand what's going on in the economy and how I might invest in it, because these ETFs are so transparent. They offer so much opportunity to react to that. Now, we don't believe in, a heavily traded portfolio unless it's being done by an expert that has the processes. But we believe that ETFs expand that toolbox for aligning portfolios to your beliefs and what's going on in the marketplace. The same thing can be said for risks versus opportunities. If you're looking to ETFs, you can trade on the option side, you can buy puts, you can sell puts, you can use the option side of the market. So there really is enormous opportunities to use those ETFs. And if you have the right technology and the right infrastructure, you can quickly create categories and groups to monitor and align to different events that are happening in the marketplace. Yesterday we wrote about the coronavirus and what areas of the market through ETFs are being affected most. So we talked about an ETF, JETS, jets, and airline stocks took a big hit yesterday because fears of limited travel, or gaming and casino companies took a big hit because folks were, Chinese New Year is coming up. And really, you can identify and map all different parts of the economy to various ETFs. Not everything, but a lot of it. And having that armed and ready allows you to not just worry about something or to want to invest in something. It makes it a reality. And finding those right ETFs and aligning it increases your opportunity to react to events in the marketplace, whether good or bad.
Mike, thank you so much for joining us. We really appreciate your perspective on the ETF market. Go to etfaction.com to learn more. I'm Lynn Dolan with ETF Guide. Thanks for watching.